The ultimate guide on how to pick stocks that will explode to 10x. The stock market is a difficult game to play. Gone are the days when people relied on experts for advice or spent hours of research before they made a decision. The accessibility and complexity of the stock market has led investors to become more reliant on stocks that will explode. This is where stocks that will explode come into play. They allow you to invest in companies that have the odds stacked in their favor and will give you an opportunity for a 10x return on your investment. Welcome to Stocks Galore, the place for those in passionate pursuit of financial freedom. Smash the like button now and subscribe to our channel to be notified when new videos are released. Picking stocks can be tricky, but there are tactics you can use to make sure you're picking stocks that will explode in value and avoid those that will send your portfolio to a tailspin. This video guide will go over some tips for picking stocks at their initial price, not just when they explode to 10x. There are so many factors that go into the decision-making process. Find out which metrics you should be looking at before making any investment decisions. It's not just about picking the most volatile stock on the market, but rather finding one that has a strong balance sheet and is poised for growth in the future. Introduction to buying stocks that'll explode. Buying stocks that'll explode is a great way to make money in the stock market, but it's also fraught with risk, so investors should be careful. The first thing to do when looking for stocks that will grow exponentially is to find out if the company you're considering has a good track record of making profits. If it does, then you should look at other factors like the company's growth rate and any possible catalysts that might improve its performance in the future. How to pick number one stock to invest in. When picking the right stock to invest in, there are a lot of factors that need to be taken into consideration. Buying stocks is a risky investment, so you want to make sure that you are cautious about what stocks you are willing to buy. The factors to take into consideration include the company's business model, past performance, profitability, relative valuation, and more. A company's business model is an important consideration when it comes to investing in stocks. These factors all contribute to the future growth of the company and the stock's potential for returns. In-depth analysis on a specific stock. Investors are always looking for companies that are undervalued and have high potential to grow in the future. For this reason, it is important to know how to analyze stocks. The first step is to evaluate the company's financial performance. The company must be able to show an increasing amount of cash flow per share and earnings per share over time. It should also have a low price-to-sales ratio, which means that it's not overpriced for its size. The company also needs a market capitalization that is at least $500 million or higher, with a minimum of $100 million in annual revenues. Investors determine the attractiveness of the stock based on their own personal preferences and biases, which may differ from investor to investor. As a stock investor, you have a decision to make when it comes to determining what stocks to buy. You've had the opportunity to take a look at the fundamentals, but you also have your own personal preferences and biases that may influence your decision in different ways. Stock analysis can be a long and tedious process. There are many factors to take into consideration, such as financial numbers, growth rates, and industry trends. In order to save time and energy, it is important for investors to find the best stocks before they go on sale. Why it is important to pick successful stocks early in the game. Just like in basketball, picking winners at the beginning of the game can help you score big. This is why it is important to have an idea of what stocks are trending or what sectors are doing well. But before you start investing your money, it is important to do your research and read up about the company. You can use sites like Google Finance for this. How to pick a stock that will grow 10x in value. There are two main strategies that investors use when looking for stocks to invest in. Picking stocks that have been consistently growing or picking stocks that have been stagnant and then trying to find a catalyst. Picking stocks with a steadily growing stock price is a safer strategy in the sense that you will know what you are going to get. However, it also means you may miss out on opportunities for large returns if you don't take any riskier bets. On the other hand, if you pick a stock with a stagnant price and manage to find the catalyst, then your reward could be much higher than what was originally anticipated. How I pick successful stocks early. I am not a financial advisor, but I have been picking stocks for over 15 years. I have had my fair share of winners and losers, but through trial and error, I've learned how to pick stocks that are most likely to succeed. It's difficult to know where to start and what to prioritize, but I put together my most valuable insights in this video, and you can use them as a guide. 1. What industry does the company belong to? 2. Is this company a leader or follower? 3. Is the company disruptive? 4. What are the company's short-term goals? 5. Has it met its short-term goals in the past? One of the most important things about picking stocks is that we need to do it in a way that's comfortable for us. There's no one-size-fits-all method when it comes to investing, so we should find the approach that works best for us and stick with it. There are two general schools of thought when it comes to picking stocks: fundamental analysis and technical analysis. Fundamental analysis looks at how the company is doing financially by evaluating the company's earnings, expenses, assets, liabilities, etc. Technical analysis involves studying the numerical patterns of a security's share price, volume, open interest, and other data to forecast its future price movements. Technical analysts can benefit from AI by using machine learning algorithms to process large amounts of data in an efficient manner. Start your investing journey on the right path with these 5 tips. Investing can be a daunting task for anyone, but by following these 5 basic tips, it is possible to start your investment journey with the right path. 1. Learn about investing and know your risk profile. 2. Create a plan and set your expectations. 3. Start slow and set realistic goals. 4. Do the research and ask the right questions. 5. Find a trusted advisor to help you along the way. How to sell stocks at the top of the market with these 5 steps. 1. Create a plan for buying stocks at the low of the market. 2. Determine how much you need to make this investment worthwhile. 3. Keep your emotions in check and avoid greed. 4. Choose a few stocks to buy and make sure they are not all in the same industry. 5. Know when it's time to sell before you get too late into the market. Best methods for investing in stocks with little risk. While investing in stocks could be a risky business, there are many methods that allow people to be confident in their investments and make money without much risk. The first thing you remember is that investors should only invest in stocks if they have a clear understanding of how this type of investment works. Without that knowledge, it's not possible to know where the risks are or what strategies are typically used. It's also important to have an understanding of market hours and what time zone you're investing in. If you're not sure, ask your broker about it before you begin buying stocks. This will help reduce any confusion or mistakes when it comes time to execute orders. If you enjoyed this video, smash the like button now and subscribe to our channel to be notified when new videos are released.